welcome you to this World Gap panel on Fintech. No change of plans. Members of Congress are gathered now in a urgent meeting, last minute thing, but they'll be here shortly. Mr. Mix will be here shortly. So what we're going to do is start with the panel. So I would like to introduce Duran to start with the panel, and as soon as Mr. Mix comes, he's going to give his remarks, and then we'll go back into the regular schedule. Again, thanks for being here. We look forward to having a very lively discussion, and I thank you for your time. Duran.
Good afternoon, everyone. We really have a really interesting panel this afternoon. My name is Duran Levi. I am the Director of Policy and Government Affairs at the National Community Reinvestment Coalition. We are a coalition of about 600 community organizations around the country who advocate for capital in underserved communities, low and moderate income communities, access to capital, basic banking services, and things of that nature. So that's a little bit by way of my background. Also was an elected official in Maryland, served some time as a staffer on Capitol Hill, and lobbying for other issues. We have a very illustrious panel here this afternoon that is going to deal with a growing and expanding area. Can you hear me? A growing and expanding area of financial innovation. Really since the crises, the economic financial crises of 2008, small businesses have struggled more and more with access to credit, access to capital issues, and particularly smaller businesses, startups, micro businesses, and particularly with small dollar loan products. So some of the folks on the panel today are really on the front lines of online lending platforms, marketplace lenders, and what is popularly called in the press Fintech, financial technology. And so we're going to hear from some of the sponsors of some of those platforms. We're also going to get in a little customer experience with some of the platforms. We have some folks on the platform who've been grappling with some of the policy issues in Washington that have come up around this new area of financial innovation. So I think you're really in for a great treat on this new and developing area of lending and policy. So let me just introduce some of the folks you will be hearing from today, and some of them have some great presentations. First, we have Daryl Esch. He is Vice President and General Manager of Small Business Lending at PayPal. He leads small and medium business lending within PayPal's Global Financial Services Division. He joined PayPal in 2010, but he has a long history in the financial sector, including 15 years with Bank of America, serving in a number of key roles there. Next to him, we have Lisa Brooks. She is the owner and founder of Heart and Soul. Lisa Brooks spent 15 years in corporate America, and in 2010, after suffering or falling victim to corporate cutbacks, she decided rather than look for another job, she enrolled in culinary school and opened her own business. So she has some experience in terms of online lending platforms, and Lisa, she was able to utilize PayPal for quick and easy credit card processing, and has also taken advantage of PayPal's working capital. So next to her, we have Asba Habib. Okay, she is the product counsel and assistant general counsel of Kabbage. She is Kabbage is a fully automated online lending platform for small business loans. She's served in a number of financial innovation frontline industries and been dealing with some of the evolution of law and public policy around fintech. Prior to being at Kabbage, she served as counsel at BitPay a merchant payment processor for Bitcoin. She also was Deputy General Counsel at Payward, which is a foreign exchange and trading platform for cryptocurrencies. How many people in here have heard of Bitcoin or cryptocurrencies, okay? That is really on the vanguard there. So she has some experience on the policy front, so we look forward to hearing from her. Next to OSBA, we have Daniel Gorfine. He's the Vice President of External Affairs and Associate General Counsel at OnDeck, which is another lending platform. Prior to that, he was the Director of Financial Markets Policy and Legal Counsel at the Milken Institute, where he spearheaded the Institute's work on innovative capital access tools and new financial technologies. He also did a stint in private legal practice. He's testified before Congress and been a national media contributor. So Daniel Gorfine. Next to Daniel, we have Sam Graziano. He is the CEO of Foundation Group. He co-founded Foundation and has served as CEO since 2011. He's also on the advisory board for the Coalition for Responsible Business Finance, which provides education and information to government and other players in the industry. He also has a long history in investment banking and private equity, serving as a principal with Centerview Partners and vice president of Keefe, Bruyette & Woods, one of the nation's largest boutique investment banks. And lastly, we have Joseph D. Nico Antonio, the toughest name on the panel. He is Executive Vice President with Regions Bank. Regions is a regional bank with operations in the South, Midwest, Texas, and is headquartered in Birmingham, Alabama. He also has a long history in banking, including stints at Nations Bank and Barnett Bank in Florida. He currently serves on the Small Business Council for the U.S. Chamber of Commerce and in a number of other board capacities. So that is our illustrious panel. We look forward to some great content, and so we will start with Daryl Esch from PayPal.
Thank you, John. Thank you. And thanks for having giving us the chance to come today. I have the best job at PayPal. That's what I'd like to tell everybody whenever I have the chance, and I mean it. We get to, in small business finance, we really get to deal with the dreamers who are fueling this economy. And we call it Dream Fuel internally, and we mean it as such, and it's been a pleasure to get to know people like Lisa and Ken who have joined us here. You're going to hear from Lisa in a bit, because you hear the stories, and I guess the older I've gotten in my career, and I've been doing financial services for more than half my life now, it's scary, sad, but true. The older I get, the more on a personal level purpose becomes to me, purpose orientation, and the clients, customers who we are able to serve with this program, it makes a difference in the world, and we're very proud. So thank you, Ken and Lisa, for making the trip here with us. Whoops, I guess it started. So I'm going to give you just a little
We believe that now is the time to reimagine money,
to democratize financial services,
so that managing and moving money is a right for all citizens, not just the affluent. We believe every person has the right to participate fully in the global economy. We have an obligation to empower people to exercise this right and improve financial health. As a leader in financial technology,
we believe in providing simple, affordable, secure, and reliable financial services and digital payments
that enable the hopes, dreams, and ambitions of millions of people around the world.
it is our duty and privilege to be customer champions. We have a fundamental commitment to put our customers at the center of everything we do.
We must be bold and innovative and execute flawlessly against our immediate goals,
With our eyes always on the future. We are one team,
valuing inclusion and collaboration.
Demonstrating integrity, trust, respect, and empathy.
We take care of ourselves
each other, and our community.
So what I intended to set up there was that what you just saw was and heard was our vision. That was the corporate vision for PayPal, is brought to you by voices from employees from around the world. And over its 17-year life, PayPal has really always had part of its core. Now we put it straight into our vision statements and our corporate missions. But we've always had a history of table leveling. And that's what PayPal started as an online processor about 17 years ago, where we really served the small startup businesses, largely those that were home-based, selling on eBay. In large cases, it was people who were doing some selling on the side to supplement household incomes. Over the years, the business has expanded where we still take pride in table leveling for the smallest of the small businesses, up to and including serving the largest of the retailers in the world. But we've got about 185 million active customers around the world, and we really take that as part of our purpose in core to create a level playing field and a place of opportunity in the world for financial services for inclusion. When, to that point, coming out of the Great Recession, one of the things that came to life for us that many of you will appreciate is where we saw a return in lending in the financial sector to large commercial enterprises. Large commercial rebounded generally pretty quickly after the financial recession. That didn't happen for the small and moderate income lending, the small lending business, where we've seen a big downtick and really never bounced back. So we started hearing more and more from our clients that one of the places PayPal could make a difference, and one of the places they had a big need and demand, was access to affordable and fair financing. That again, the larger corporations were largely taken care of, but the smaller businesses and the home-based businesses really didn't get that same level of bounce coming out of the recession in the years that followed. As a result, in 2013, we launched a program called PayPal Working Capital. PayPal Working Capital is a regulated business lending product. It's issued by a bank partner in Utah that's FDIC insured and regulated. The program is available exclusively to PayPal merchants, so you have to be processing on the PayPal network to take advantage of the program. PayPal then buys the receivable back from the bank, so PayPal is taking the financial risk. This is not what you'll hear about marketplace lending where loans are issued and then procured out to investors. So we actually stand behind the loans that are made in this program by buying the paper back from the issuing bank. But in addition to creating that access that was so desperately needed, that affordable access that was desperately needed by our client base, when we decided to get into the space and build PayPal Working Capital, we went after what small business owners around the country and around the world, frankly, shared in common, pain points that were long-standing for small business owners getting financing. And these are a few of them that you see listed here that make this program unique. The first is the time that it takes to get funded. So I've seen an FDIC study historically that demonstrated that something like 33 hours of administrative time goes into, on average, it goes into getting a small business loan for the business owner. And then you normally, if approved, you wait days or sometimes weeks to get funding. For this program, because it's based on the attributes of the PayPal relationship, and in most cases multi-year relationship that PayPal has with the client, we're able to do this in an online manner where literally about 5 minutes on average for the application process. If the terms are accepted and approved, then the funding happens in seconds. So the money goes straight into the PayPal account, becomes usable in real time. The second thing that small business owners told us is the need for flexible repayment. So unlike myself and probably some of you in the room here, who have a steady, predictive paycheck that you know what your paycheck's going to be every other week or once a month and can plan around that. Small business owners generally don't have that same luxury, that sales fluctuate up and down. So the repayment associated with this program is automatic and connected to the sales that are coming across the PayPal network. So if a business owner is having a particularly good month, they pay down faster. If they're having a slow month, they get relief that month. So there's not that minimum set monthly payment. And then the other thing that we wanted to address here, and I expect we'll probably talk about this one later today, is one affordable fixed fee. So the PayPal Working Capital loan the fee associated with it, it's as transparent as we believe it can get, and we've had a lot of interaction with our clients on this as we were building it. That transparency is simply one line on the statement, and it says your fee is, and it's expressed in dollars. And so and people want to know what the APR is. I'll tell you, it's generally on average in the low 20s. So for a short-term loan paid out right away, it's very competitive. It's definitely competitive versus the primary alternative, which tends to be a credit card, and that's all in. So there's no such thing as an origination fee. There's no such thing as a late fee. There's no incurred interest based on the amount of time it takes to come back. So it's a single fixed fee that a business owner can make a decision, and it's viewed as being very highly transparent from our customers. They love that feature. The flip side of that is when you give APR and express things in APRs, which are generally what people who are looking for benchmarking want to see. The problem is you don't really know how to figure out the dollar cost of that borrowing. Most people don't. And then you end up with, on top of, even if you know the APR, there are other fees associated with it. Nobody ever plans a late fee, honestly. So when late fees happen, they're surprises, and they inflate what would otherwise be the cost. So we think it's a very affordable program, and our customers have generally told us they agree. And then finally, what's different about it is there are no credit checks with this. We're not basing decisions based on people's FICO. It's not that 3-digit number you carry around. There's no personal guarantee with this program. It is an assessment of the business health based on what PayPal's willing or able to observe about the business, generally, again, over years of relationship experience. So it's a disconnection, if you will, of the personal and business. And then our customers have really embraced this program, and I've been in, as I mentioned, more than half my life now, 25 years in financial service products. In my career, I've literally never seen anything that customers have embraced and applauded at this level. Since starting the program in 2013, $2 billion of Dream Fuel has been distributed to 90,000 unique businesses, and we're distributing more than $100 million a month in business financing, generally to very small businesses. Almost all of them are less than $1 million in annual sales, and many are in that $100,000 to $500,000 in annual sales range. So this is a real small business loan. And probably the thing that's maybe the biggest proof point, and then I'm going to turn it over to Lisa, as a much better spokesperson. I'd rather hear her talk. But the one thing I will say as a proof point around that this is making a difference in leveling the table is we went back and did a study on the business in the U.S., and what we found is that through this program, 25% of the lending is going to the 3% of counties that have lost 10 or more banking centers, branches, since 2008. So on basically an 8-to-1 skew of the index, this is where the borrowing is taking place. This program is entering and creating opportunity in places where the banks have shut doors on branches. So we're proud of that. We also know that when we track low to moderate income ownership of this product and acceptance of this product, it runs about 35%. I think that's compared to about 21% for traditional banks. So we're seeing the great evidence. We're leveling the playing field. We're very proud of it, and it's an honor to serve people like Lisa, and I'll turn the microphone to her.
Thank you. So today I'm just going to share my story and tell you how PayPal's come alongside my business and made a huge difference in our success. As was mentioned in the introduction, I was a victim of corporate downsizing in 2010. But even before that, I was working for an IT company, healthcare IT company, for 15 years, and I bought into the real estate market. I had real estate investments on properties that after 2008 were vacant for 9 months. And so I ended up in February 2009 filing bankruptcy. And so it was devastating to do that. And I was very proud of my credit at that point. And then it was just, I had no choice. And so 2009 and then in 2010 I was laid off. So at that critical point in my life, I had made a decision to walk in a different direction and do the thing that basically God put in me to do, which was to cook. And that was my passion, my talent, my gift. I've been doing it my whole life. Never thought about doing it for money, for income, but that's the leading I got, so that's what I did. And so it started out in 2010 with just me cooking for people privately in their homes. I used PayPal from the very beginning for merchant processing, so that was how the relationship began. It was just an easy way to process, credit card payments, which made me feel more legitimate as a business owner, to be able to accept payments online, send invoices online, accept credit cards, over the phone or what have you. And so that's where the relationship began in 2010. So from the beginning, I was using that product. And then I was in culinary school too, as mentioned. So after I graduated in 2013, I kind of held the business, kind of held the growth down because I was in school. And I just supported myself through my 3 or 4 families I cooked for every week. But I constantly was telling new clients no. Like, I'm full, I can't take anymore. But once I graduated, I thought, there's a lot of demand out here, so why don't I met a lot of, culinary folks while I was in school. Let me bring some more chefs on so I don't have to say no to clients. So I brought on some chefs, and we started, my client base went from 4 to about 15 clients a week, and so I've created opportunities for other chefs to make good money as opposed to the $8 an hour line cook might make coming out of culinary school. So they're at about $20, $25 an hour working for me as a personal chef. So that's kind of how the growth started. And in 2013, I think the end of 2013, maybe beginning of 2014, I received an email from PayPal saying, we've got this working capital lending product. And I was very skeptical about it. I hadn't even thought about, obtaining financing because I had to file bankruptcy. I just knew it wasn't going to, that wasn't a possibility for me in growing the business. So I was, kind of dipping into my IRA, my 401k funds that I built up, for building the business. But I wanted to grow, and so I took advantage of it. I really applied for the first one because I was just wanting to see if it was really going to work. Is this really real? They were saying to me in this ad, in 5 minutes I can have, $4,000. And I'm like, okay, let me just do that. So I didn't even have a plan for that money at first. I just thought, let me see. Filled out an application. But it wasn't even an application, really. You go on. It's based on your business performance. It's not based on your personal credit score at all. My business had performed well. Of course, PayPal, because they did my merchant processing, they had all of my information. They knew what my sales were. They'd seen the growth of the business over the last 3 years of the relationship. And so based on that performance, they said, here's the amount we're willing to lend. And it was based off a percentage of my sales over the last, I'm not sure what it is, maybe the last 8 months, 9 months or so. And so when I went on to apply, it was basically like, oh, here's your options. Do you want this much, or this much? Do you want to pay back 10% of your daily sales, 15% or 20%? And here's the fee. If you borrow this much, here's the fee that it costs you, and that's it. And so I chose my level of daily sales. I think I've always chosen 15% or 20%. And so, as Dale mentioned, when sales are slow, you don't have to worry about this bill that you've got, this loan that's hanging over your head. It's just, as my customers swipe their cards, PayPal takes their money, I get the rest, it just kind of happens. And then in 3 months, 4 months, this loan is paid off. And I don't have to do anything. I have to think about it. And then guess what? Oh, you have more capital available now. And so it felt good. It almost felt like PayPal was making an investment in my business rather than a loan, because, it was just based on my performance. And I felt like it is a loan, technically, but it just felt like an investment, like they were investing in my company. And so we've used the working capital product, I think, 4 or 5 times since 2013, and each time it's in greater amounts because my sales magically have grown since I've gotten working capital. So I've gone from when I started, I may have been making $60,000 a year or so, just me, and now we're at a $300,000 a year business, and we employ 12 people as of today. And some of these are students coming fresh out of culinary school, and I've got marketing director, I've got administrative assistant, and I'm employing people. It's like, wow, it's a really powerful feeling to have people who are depending on my brand, my product for their living to feed their kids. So it's been amazing. And the thing that I would just say in regards to the product is that, and it's the things that he mentioned before, that just the ease of application for one, the fact that the money immediately, when you click that accept button, you go and check your PayPal account, the money is in there. It's like 5 minutes, and you're able to go. You're able to do what you need to do. We use the money to buy a delivery van to expand and get a commercial kitchen suite, and hire people, hire delivery drivers and cooks, and you do marketing, do trade shows, and so that's how our business has grown. It's grown 300% just in the last 3 years. So the ease of the loan, the instant funding of the loan, and the fact that it's based on my performance as a business, not on my personal credit, which thankfully that bankruptcy is gone, hallelujah. But, while I was really struggling in that period of time, I know that I wouldn't have even been considered by a major bank. So this really fills a gap for people like me who now employ other people and are making a difference in our community in Charlotte. So I think it's really powerful. And anything that would affect this type of product for people like me, small business owners, in regards to legislation, or, tightening down on, what it would take, or classifying these loans as, I think I've heard like small business loans like need to be $100,000 or something. That would totally cut me out, even still today. So I'm really passionate about protecting this type of product for all small business owners in America.
Thank you, Daryl. Thank you, Lisa. Very good information about the product and actual customer experience. So we really wanted, after these two talking about PayPal, to really open it up for audience questions. If there are any questions. I could also have some questions, but let's just get straight to the audience. What actually think you popped up first?
But I have a question about how long do you have to be a client of PayPal to take advantage of this product? And what are your minimums and maximums in it?
So you have to be a client of PayPal for no less than 90 days. So processing on the network at least 90 days. I will say most of our customers using this are with us 4 or 5 years, but minimum requirement is 90 days. And then the minimum amount of volume that we need to see on the network first is $15,000. We have to have seen at least $15,000 in the prior 12-month period. Typically, these are $100,000 to $500,000 businesses who have gravitated the most. And then the maximum amount that can be borrowed today is $97,000. Or a maximum rate of 18% of your prior 12 months volume on the network. So it's the lesser of those two things, 18% of the volume or 97, whichever is lesser.
Actually, think you had a question.
Hi.
And you might say, are you a small business owner?
I am a small business owner.
Okay, go ahead.
So, but I don't use a lot of merchant stuff. So what I'm about to ask is whether or not, and you have a really good product for people that are using merchant services. Do you have any products, or are you looking into any products that would build a relationship or encourage people to use a merchant service?
Yeah.
Okay.
So the short answer is yes, we're looking at things, nothing yet to announce, but we are looking at options. But today, and why we've been able to open this program up the way we have is PayPal really built on a risk management capability, and we were able to exercise existing capabilities based on the volume we see, but we are looking towards the path of making it easier to come into PayPal and bundle that processing and payment at the same time.
All right, yes.
Hi,
Hi, my name is Sabrina Madison. I'm a small business owner. Even though her personal credit is not a requirement to secure the loan, is there any way that you can report this relationship to consumer credit counsels so that it can positively affect her credit?
We don't, and the fact that we're not drawing from it, it's normally a reciprocal. If you're drawing, you would report. If you access it, you could report, and we're not drawing on it. And I think even if we could, while I appreciate the spirit of the question, I think we like the value, the idea of keeping for Lisa business and Lisa personal as two separate things. You agree?
Yeah, I would agree with that. I'd actually never even considered that. I mean, so I feel like it's a good question, but I like the fact that it's treated separately. For me, it only worked that way.
I think over there, we'll get right back to you.
Jackson Gill with the Milton Institute. The heart and soul CEO, I apologize, I forgot your name, but given your relationship with PayPal working capital over the last couple of years, have you ever considered going back to a bank financing?
Never. Not once. Mm-mm. You know, and the fact that I think he mentioned the APR and the fees, and you just don't ever know what the loan's really costing you. You don't really know. I mean, I'm running a business, so I'm wearing 17 hats. You know, it's a small business, and I'm in the kitchen cooking. I'm doing payroll. I'm doing invoicing and the billing. Like I'm doing everything, and so I don't have time to worry about or think about sitting down a month and writing a check, and then I don't, how many months is it even gonna last? I don't know.
Just to add on to that, did you find yourself, when you were servicing banks at the beginning, let's say, were you turned down a lot?
I actually never applied. Knowing I had a bankruptcy, I just, made the assumption that I would not qualify for traditional lending. There's no need to have the actual dings and inquiries when I, pretty much knew that wasn't going to happen. So I didn't even pursue that. And at this point, I don't see a reason to be honest. I like the way this works. I like the fact that it's just paid out of my sales. It's like they're purchasing my future receivables is what, and then just taking that back over the course. So when I had, like this summer, we had a pretty slow summer, June and July, like one of the slowest summers the last few years, like those 2 months. But I don't have to worry about my PayPal payments because, if I only took in, a couple $1,000s this month, then the payments that they take are only that same 15%, as opposed to a good month, when I'm doing 10,000 and then I'm paying back, a large chunk of the loan that month. So I just, that works for me.
So we sort of broke it up so that we could take Q&A after each panelist for about 5 minutes. So what we're going to do, we're going to take, I think, this young lady and that young man, and then after the next panelist, we'll open it up for some more, okay? So yes, ma'am.
Josephine Porter with Connect Jobs Consultant of Business and Diversity Strategy. Two things. What are the risk factors? You mentioned the threshold of 15,000 as a minimum. I'd like to know more about the risk factors and what would trigger default, or if there's ever a default.
Yeah, okay. So the risk factors, the fact that we're the processor and actually taking possession and handing the money off in the process. So unlike a traditional credit card processor, PayPal is a little different in that it's a two-sided network between the customer and the merchant, and we actually handle the funds. And so in handling that receivable, we're able to then take the share of payment off. And that insight, the ability to do this at scale with millions of merchants around the years, or millions of merchants around the world for over 17 years, has given us deep insights relative to business performance based on sales patterns, the type of industry that a person is operating in, the geography they're operating in. If you've ever seen, like sometimes they'll index stocks and they'll show like two stock lines going of similar kind of businesses. We have the capability to do that internally based on the merchant type. So just because a merchant is in a business might be in something that looks like a down pattern on their sales doesn't necessarily mean anything. We've got enough insight based on the other that industry perhaps to say that, look, this is it's a seasonal downtime, and this is a business that's actually gaining share against its competitors, so it's a great way to judge the health. But it is primarily that processing and handling the receivable. And just the one thing I'll say is having run business lending at Bank of America for a number of years before joining PayPal, I would take the data we have by being the handler of that receivable every time over things that are frequently self-reported on a piece of paper.
Okay.
Oh, sorry. Yeah, a default description would be if within a 90-day period you haven't made at least 10% of the repayment. Now, these tend to be very short-term. These tend to be 12-month kind of transactions on average. So you've got to be pretty far behind to not be paying 10% of the original amount in a 90-day period.
I know there were some more questions. We'll get back to, we'll get, just remember your question. I did want to, as Ozma comes on up, I did want to ask one question in qualifying Lisa for the loan. You looked at her business activity. So in terms of repaying the loan, does it simply just come from her business account? Do you consider her other debts or other things,
No. It's purely off of that relationship with PayPal, so a judgment based on what we see as the strength in her business and the patterns in the business, and then that repayment is happening every day as Lisa's business, as Heart and Soul has sales coming through, that percentage that she's chosen is deducted in on a day or a week where there are no sales or a month, then there is no payment.
Ozma with Catch.
Hey guys, how's everyone doing today? Good. It's good to see questions, people being very engaged and asking thoughtful questions. So usually I start with some sort of spiel about how we're serving the underserved, but I actually really liked, which is true by the way, not to say it's not, but I actually really liked Lisa's story because it was funny to hear that businesses that our industry is financing are actually serving a real need. And I say a real need because I don't cook. Like, I just don't do it. I'm not good at it. I've never been good at it. I barely understand my vegetables. Didn't eat them until I was like 20-something, my poor parents. But I actually subscribe to a food delivery service, which every Thursday night brings 5 dishes, and I can eat them throughout the week. And so it's really cool to see that and her and I were talking about this, and I was like, this is so awesome that you do this, because this is exactly the service that I subscribe to. And to hear that our industry has enabled you to do this makes me really happy. So I just wanted to start with that, because usually we always talk about how it's the other way around. So cabbage. What is it? It's cabbage with a K for starters, which we really like. A lot of our products, services, we do with a K. So we've got our back-end system, it's called Corp with a K. It's our marketing people love it, don't ask. So what is Cabbage? We're an online small business lending platform. What does that mean in practice? Practically, it means we enable small businesses to access capital quickly, easily, efficiently, and get qualified in a matter of 7 to 10 minutes, and do this entirely online. Incidentally, it's also slang for money, which doesn't hurt. So I think, hearing about PayPal's product and how they serve the market, I think this will be helpful because I feel like some of what Daryl and what Lisa shared with you, I'm hoping we can bring to life with just kind of walking through a demo of the types of things that a customer truly sees. But before I get into that, I just kind of want to provide a higher level overview of how we operate, because we are different from a traditional bank in both our process and our philosophy. So we've truly tried to simplify the lending process. That's been our goal from day one, and we do that through a 100% online application experience. We look at a number of data sources, traditional and non-traditional, and the goal is to really approve you quickly and to make it as seamless and easy for you as possible. So if Lisa is making butternut squash soup at 2 a.m. in the morning and she wants to apply for more funds, she can do it on her phone in a matter of minutes without really even sitting down or pulling up her bank account. So I think that's really the philosophy. We do this by connecting the dots, simplifying the lending process, that is. There's a number of data channels that we look at in the back end. So to make the process very easy for our customers, we try to pull all this information together ourselves so that customers don't have to call their accountant or their business partner or log into every single data source that they use. We look at traditional Experian and Equifax data. We also look at identity information because we want to make sure that you are who you say you are and that no one's hacked your account and you're getting the money to your bank account. We look at revenue channels. So we're not wed to one particular mechanism. So, for example, if you use PayPal or if you use Stripe or if you use whichever payment channel you use, we're willing to connect with any of them that allow us to connect. But more importantly, that you allow us to connect, because the important part of this is that we will not connect to a data channel unless you've authorized us. So if you're comfortable with a particular data channel that you like, that you think reflects how your business is performing and you want to connect it, we ask for your consent and then it's connected. So going back to the different data sources, some of these are traditional, but like I said, we look at your sales channels, we look at your bank account data, we look at your accounting information, so we can connect to QuickBooks, for example, so you don't have to prepare financial statements, we can prepare them for you. We look at your payment processor information, and we use all these dots to ultimately give you a decision. Thus far, we've served over 100,000 small businesses. We can look at about 960,000 data points. I know that's a lot, but with each particular data source, there's a number of data points. And we've put out about $2.3 billion in capital over the last 4 years. So about 95% of our customers have 100% fully automated experience. The other 5%, usually it's some sort of identity mismatch. You fat-fingered your social security number, or your bank account data doesn't match the data that you've provided us, or that you forgot your password to your bank account and you're not able to connect it. But on balance, it's pretty seamless. The application approval only takes a matter of minutes, and funds can be deposited instantaneously to your PayPal account, or within a matter of 1 to 3 days to your bank account. So I actually think it's kind of funny because we've tried so hard to simplify this process, and the slowest point is actually the back-end payment channel. So if ACH was faster, we'd get you the money faster, and for a payments nerd like me, it's super exciting because same-day ACH is actually going live in October of this year. So for a lot of our customers that bank with certain financial institutions, not only will you get approved in a matter of minutes, you'll probably get your money on the same day, which is super exciting. So I want to go into some of the product specifics because I think that's important, and I think that matters to a lot of folks that are actually shopping around. So what do we offer? We kind of offer a hybrid product, and you'll see that as Dan, who's one of my colleagues, talks about On Deck, which is another lending platform. I think the goal is really to have enough diversity of products that we can service the whole market. You know, that we can service people that work through PayPal, or people that don't work through PayPal, or people that have a certain amount of history or that have been in business for a certain amount of years. There's really, the goal is as an industry to diversify product types, so there's something for everyone out there. And so for our product, it's a little bit of a unique structure. We have a line of credit under which you can take loans. So it's really kind of like a line of loans. So it's anywhere from $2,000 to $100,000, but the cool thing about it is you can qualify for a line of credit and not pay a penny until you use it, which is sort of unique because a lot of the times there is a cost to have backup funding in place. You may want a $80,000 line of credit that you're just holding on to in case you need to buy something or some major expense comes up, but you don't have to pay for it. What you do have to pay for is the draw on that line of credit. So let's say you got qualified for $85,000 and you just need 10. That $10,000 is going to be an independent loan with its terms, which will be very clearly explained to you, and I'll show that in the demo, and that's what you pay for. And it's either a 6-month term or a 12-month term. And you know, I think one of the goals of this industry as a whole is simplicity and transparency. So we just have one fee. It's a monthly payment, and it's flat. There's no origination, there's no maintenance, there's nothing. It's literally your principal and your one-line fee item. And you only pay for what you use while a balance is outstanding. So just kind of talking through the fees, I mean, I mentioned we don't have any origination fees, we don't have a prepayment penalty, so you know, if you're matching your ROI, if you're buying inventory, you know you can pay this loan back in 3 months, go ahead and do it. You'll save, it's great. So it just kind of talks through, or I guess shows really the monthly fees, an example of a 10-month loan with a 6-month term. So months 1 and 2 usually will have a higher fee, And then months 3 to 6 will have a flat 1% regardless of the product. For our 6-month product, it's higher on the first 6 months, and then it's flat the remaining 6 months. So I do want to talk about users and use cases. So we've done a number of surveys and studies of our customer base, and 1/3 of our customer base is women-owned businesses, which is super exciting to see because I know just from family members, sitting across a loan officer and advocating for your business as a woman or minority is not always the easiest thing, and I think that's where the power of data comes in, because essentially you're removing that entire process and putting it online to where it becomes blind and it's a matter of merits. You're literally getting a loan based on the merits of your business and how your business is performing, and not who you are or where you are or what you look like or how long you've been sitting there in front of the loan officer, how many times you visited him or her, whether you go to the same church. It's literally a matter of your business performance. We are completely accessible throughout the U.S. We serve all states and we serve all U.S. territories. We do not currently offer the service, or I guess the product, outside of the U.S. We do have access through mobile and PC, so you can apply for a loan entirely online or on your phone. It's a 100% blind application process, and that's important because we actually don't collect any information regarding your race or your gender or your ethnicity. The only thing we collect is information regarding your business performance. And I think the last part's interesting because, there's really, post-financial crisis, there's been a real credit gap. And when you look at a lot of the studies, they talk about the credit gap being for businesses that are earning less than $500,000 in revenue. It's a lot worse for businesses earning $250,000 in revenue. And if you're currently earning less than $50,000, forget it. But that's not necessarily true of Cabbage, because we have plenty of customers that are earning less than $50,000 in annual revenue and have still qualified for a loan. So I think that's where the alternative data comes in, because it gives us the ability to open up credit segments that have previously been underserved. So I'm going to go ahead and just go through the application process. So we know, like Daryl and Lisa just mentioned, how easy this process can be, and I think sometimes it sounds kind of too good to be true. So I just want to walk through what one potential lending platform may look like in the application process. So it's literally 3 steps. That's it. You enter your business information: business name, business address, industry, company structure. You connect your bank account. We do need some information about you. We need to know that you have some cash flow and that you have some money in the bank and that we can see your revenue and money coming in and money going out. So what we do, instead of you actually uploading a document, we let you connect directly to your bank. So you pick whichever bank. We support over 35,000 banks. You log on, let's say you're a Bank of America customer, you provide us your username and password. I think it's really important to mention that we actually don't store any of your credentials. They're completely tokenized, so tomorrow, God forbid, if we were to get hacked, we wouldn't have that information. Nobody could access your account. So you provide that information, and then the last step, you just provide your personal information as the business owner. And guess what? You get qualified, provided that you satisfy all our criteria, which, generally speaking, like I said, if you have more than $50,000 in revenue and you've been around for a year and you've connected your bank account and there's cash flow in there that we can see, we can underwrite you. So now that you've qualified, and as I mentioned, we separate the line of credit construct from the actual getting cash construct, because what if you just want to have this line of credit in the background and not do anything with it until you need to? Well, let's say it's finally time and you need to. So you want to go actually get cash. So what does that experience look like? Well, you go to your dashboard, you select how much do you want. Let's say you want $10,000 and you've selected a 6-month term. You can actually see on that dashboard exactly how much it's going to cost you. So the top line item is the principal, and then the bottom line item is the fee, and then the last item is the total. And that's it. Those are the 3 components of your payments. And then you select Get Cash. And it asks you, hey, is this correct? You asked for $10,000, you want it to go to your Bank of America account. You say, okay, yeah, that's right. And of course, we're not going to commit you without you looking at the loan agreement, because that's important. Obviously, you want to know the terms and conditions that apply to your loan. So we allow you to save it, we allow you to print it, we allow you to scroll through it. And most importantly, if you don't like the terms, we allow you to decline it. So let's say you go through the loan agreement, you scroll through, you're comfortable with the terms and conditions, you know what your payments are, you choose to accept it. Guess what? Cash is on your way. It's really that simple. It's 3 steps. I mentioned the line of credit concept. So let's say you qualified for a $65,000 line of credit, but you know that you want to make an investment in 2 employees and perhaps some advertising, and you want to get $10,000 more. Well, you can actually affect that process by giving us access to additional information so that we can look at your more holistic business performance and potentially give you access to more funds. So how do you do that? Let's say you have a QuickBooks account and we don't have access to it right now, and we tell you usually, hey, if you want more cash, connect this or this or this account. So you go through and you connect your QuickBooks account. Well, how do you do that? You go on your dashboard, you select whichever account you want to connect, whichever alternative data channel. You go through the QuickBooks connection process. They actually have a process in place for precisely this type of stuff. You enter your username and password, very similar to how you did for Bank of America, once again, totally tokenized. And you connected it, and it's actually helped you get $10,000 more in credit. So I think in a nutshell, that's essentially the process. There's a couple of other slides, but I just wanted to kind of bring it to life and show you guys what it looks like and what the opportunities are and how simple and convenient it can be. So I'm going to stop there and see if there's any questions or, yes.
Real quick, Calvin Boston from MoneyWise PBS Strategy. Couple quick questions. First, I'm glad everybody's here, but a lot of you still use the basic credit score as a determinant of whether or not you can get a loan. Those scores do not look at the complete picture of African Americans for the most part, and therefore we're bounced out as if we're going to any other factor. If you could speak to that, that would be important. Secondly, we know that right now all technology companies have 1 or 2% of people of color working for them. Not this year, but when you come back next year, can you let us know how many people of color work for your firms? And then lastly, you had a number up there for the number of women. How many people of color have you given a loan to would be important? Thank you.
All right, so I'm going to address that backwards. I will come back to you on the statistics about employees of color. We're actually prohibited from asking about your ethnicity in the application process, so we can't get that information. We do surveys that inquire about your gender, which is how I know about the women, but those surveys have not historically asked for your ethnicity. So that number is hard for me to get, but I can certainly look into that. On the point of credit score, so there's a number of different products and service providers on stage today, and I think everyone's product's a little different. They're intended to serve different market segments. In short, it's intended to democratize access to financial products and services by being as inclusive as possible. We do pull your consumer credit report, and the reason we do that is primarily for anti-money laundering and OFAC reasons. So if you enter your name as Jaron Levy, and you give me your social security number, and I pull your credit report, and your name is not Jaron Levy, it's Azba Habib, I need to know that because I'm doing OFAC screening on her name, but I'm not going to do that because I'm going to pull your credit report and I'm going to make sure I know who you are and actually screen that name. So there's an AML OFAC component to us actually pulling that information. That's really what we use credit reports for. It's actually, credit score does not go into our underwriting model. We do look at predominantly alternative data, but we also look at the traditional 5 C's of credit. We just do it behind the scenes instead of putting the burden on you to actually generate all that information. So I think that answers your credit report question, and the diversity question. Was there a third one? I'm trying to remember.
Is this number of people that work for your firm that people of color?
Yeah, well, we're based in Atlanta, so that doesn't hurt. But I don't have a statistic for you. I mean, it's an incredibly diverse workforce, I will say that, which is awesome. I mean, and I will say about 50% of our leadership is female, which is really exciting to see for someone who's, in this space as well. Yeah.
I just have a really quick question. What are you? Are you a bank? Are you a private? What are you, and who's behind the money that you're lending to folks?
Really good question. Really common area of confusion. We are a non-bank technology company. As a non-bank technology company, we cannot issue loans. Banks, however, can. If you think about it from like a higher level, banks really do 2 things. They take deposit and they issue loans. In order to do both, you have a charter, right? Or you have a license, depending upon if you're state or federal. We don't have a license. We're not a licensed lender. We have always chosen to partner with a bank. And I think that's a strategic discussion. You can get state lending licenses and you can issue loans. We've chosen not to do that for a couple of reasons. When we sort of evaluated our strategy, when we wanted to be a technology company, if my government relations guy was here, he would probably say we're a tech fin company as opposed to a fintech company. That's his favorite line because he thinks we put all our effort into the technology. And I think it's true because we spent the first 2 years of the business really building the platform. Invested over $50 million in building this automated underwriting technology. And we recognize that's where our core strength is. We also recognize the privilege that banks have, which is incredibly low cost of capital, largely through deposits, another thing that banks can do that non-banks can't do. So recognizing that, it always made more sense for us to partner with banks. To specifically answer your question, all loans through the Cabbage platform are issued by Celtic Bank, which is our banking partner based out of Utah. It is a state chartered bank that is federally regulated by the FDIC.
But you're not owned by that bank?
We are not owned by that bank. Correct. So when you actually get a loan, your loan agreement is with Celtic Bank. We're not a party to that agreement. That is a direct relationship with you and your bank. This is a federally regulated program. We've been audited 3 times by the FDIC, so there's a level of regulatory scrutiny that's at play in this particular program. We act as a service provider for the bank, and we license our technology to them.
So it's safe to say that your platform is more like an origination platform, right?
Yeah, it's a technology/origination platform. That's exactly right.
I think we have a couple more speakers, and I know there's so much interest. This is great. I love it. But we will have some more opportunities for questions. Very good. As the next person comes up, I think Daniel Gorfine from On Deck. Oh, he is? Okay. Okay, all right. Well, we do have the sponsor of this great forum, Congressman Meeks, here. All right. Democrat of New York City, Jamaica, Queens. All right. I think Teresa Coxum from the Small Business Administration is going to introduce the congressman and give all the great things about his background that he's doing.
Absolutely, and I'm going to be super brief because our Congressman Bill is extremely busy and he has about 10 other engagements that he must be at, and so I'm going to be extremely brief. As Jareen said, my name is Terry Coxum. I'm the Regional Advocate for Small Business Administration. I'm responsible for all 62 counties that are New York, the 21 that are New Jersey, Puerto Rico, and the U.S. Virgin Islands. And so I'm here as an additional resource, but I want to talk about, because it's an honor and a pleasure to be here today, it's an honor and a pleasure to witness some of the great things that the Fintech space is playing in. And it's an honor and a pleasure for me to introduce you to the Congress member from the 5th Congressional District. All right now. Gregory W. Meeks, 17 years tenure in the U.S. House of Representatives. He is an effective and common sense leader who gets things done. And that warrants to why he has 10 other jobs to do today. There's 2 important prominent committees in the House. Committees in the House. He's in the House Committee of Financial Services as well as the Foreign Affairs Committee. And he's spot on in having this conversation about building wealth with our fintech technologies and with all of you. He's spot on because he understands the importance of building wealth. He understands the space that the minorities are playing in building wealth, and he wants to bring all of the resources that are available to us to the forefront. Congressman Meeks, in addition, is a senior member of the Subcommittee on Financial Services and Consumer Credit, and that committee it reviews the laws and programs in the U.S. Department of Housing, Urban Space, Federal Reserve, Bank, Deposit Insurance Corporations, Fannie Mae, all the things that are important to us. And so Congressman Meeks seeks to promote policies that strengthen America's economy and the national security and build relationships that remains in our nation, and that he's in the forefront of globalization as well. So I'm honored to present to you our Congressman from the 5th Congressional District, Gregory W. Meeks.
I may have to take her on the road with me. Thank you for that great introduction. It was really good. Let me first acknowledge, this is my good friend, the new president of the National Bar Association. Where's Kevin Judd? I know he's in the house.
All right.
And then, you know, this workshop in the Congressional Black Caucus Foundation is a 501c4, so it's non-political, but all politics is local. So my district leader, who helps make sure that I get on the ballot every day, Valerie West, is in the house. And then I just want to, of course, thank Garan for her hosting this distinguished panel and moving forward with making sure that we disseminate information that is tremendously important. And I'm going to give you the short version. I apologize. Well, first I should welcome you to the 46th annual Congressional Black Caucus, or the ALC weekend. Because it's a weekend, it's really a week. So I want to make sure that I welcome all of you to the ALC week, and thank you for being here again. And as indicated for me, one of the most important issues that we have to deal with is making sure that we start to close the gap of wealth. It is what I call the second phase of the civil rights movement. And one of the best ways to close that gap of wealth is through business. And small businesses are the heart of a thriving community. It creates the most jobs. It is what provides stability in community and neighborhood. But what we have found, especially post the 2008 financial crises, is that communities of colors and their access to capital has been limited because banks, to a large degree, have put us out. And folks don't look at the expertise that we have as business people and take that into consideration when you make a determination as to whether or not someone is qualified for money to run that business. So when we had folks come into our office and to talk about what was going on, and I think you heard Lisa already, and the opportunities that are non-conventional. So for me, what we need to make sure, and what I want to make sure that individuals in my community and throughout this nation understands, is state-of-the-art, cutting-edge, different ways of financing so that we can get what we need. And listening to Fintech and it being innovative, it seemed to me only logical to make sure that we shared that information so that stories like Lisa's can be duplicated, and we can make sure that we're creating businesses that can make money, because I want to be clear. We live in the greatest country in the world, but we know that it is a capitalist country, which means that you gotta make some money and not afraid of it and not apologize for it. You can't pay anybody if you can't pay yourself. If you can't make money, you can't help nobody. We can't be equal if you have, somebody else has all the money and I don't have any. Don't tell me we equal, because we're not. So what this is to try to find out innovative ways to level the playing field. And when I listened to what the fintech companies had to offer, I said, well, we still got work to do, because we still got to make sure, we want to make sure that it's sound, We want to make sure that they're properly regulated. We want to make sure that they're doing the right things. We want to make sure that they're hiring people of color and lending to people of color. We want to know what those statistics are. And those of us in the Congressional Black Caucus, we're going through all of the companies everywhere through America to make sure that we've got people on these boards who makes decisions on what the policies are of the various companies. That's tremendously important to us. But we could not allow this weekend to go and pass after I got that information, to not share the information. Because too often when I go to other small businesses and we start talking, I ask, do you know about Fintech loans? They didn't know. They didn't know what opportunities were there. They didn't know who else to talk to. So I thought it would be the appropriate opportunity, because those who attend the ALC weekend come from all over this country. And you can take that message back to someone that you know, if not yourselves, that there's opportunities to get the capital that you need to continue or to have your business strive. That's what this is all about. So I apologize for being late. We've had, as I said, this is a 501c4 organization, so I can't tell you about the politics of Donald Trump and what we had to do. I'm going to tell you about the press conference that we had, remember the Congressional Black Caucus. I'm not going to tell you that I got to leave here to go to another press conference to talk about the politics of Donald Trump. I'm not going to tell you about the good policies of Hillary Clinton, because I can't do that in this place. We'll talk about that another time. But I want to thank each and every one of you all for being here and for listening to this message. I'm getting out of the way because I heard all the dynamite questions that were being asked, and still I hear you have some people left to make their presentation and no more questions. Please, thank you. Take the message back. May God bless each and every one of you.
Thank you, Congressman, and thank you for your leadership on the Community Reinvestment Act, Fintech, lending to underserved communities and low and moderate income communities.
That's another thing we got to do. We've got to change the CRA to make it more effective today. It was good 40 years ago. It's not doing what it was intended to do. We've got to hold some of those banks together to make sure CRA is doing what it should be. You're right.
My organization and the Congressman are working very hard to strengthen the Community Reinvestment Act to get more small business, mortgage, and other lending into some of the more underserved communities in the country. OSBA raised a lot of issues around, and some of the questions. Oh, Teresa Hassett.
I'm sorry, I was very brief in telling you that the additional resources I bring to the table because I wanted to make sure that we heard from our esteemed Congress member. So I told you the areas that I represent as the regional advocate. We have our regional advocate here from Region 3 that represents Delaware, Washington, help me out, Ngazi.
Pennsylvania, Virginia, West Virginia.
And we work with small businesses on the barriers, the best practices, and the big ideas. And the main two things that I want you to walk away from is understanding that this is an additional resource. So our Office of Advocacy, my boss is Darryl DePriest. He doesn't report to the administrator. He reports directly to President Barack Obama. So when we do have these barriers that you're talking about now, that's the conversation that we get to have. So we're at the table with the federal regulators. So the consumer, Financial Protection Board, we're at the table with them. We're at the table with the SEC, making sure your voices are heard. The Congressman Bill made a huge point. Small businesses are the engine that drives this economy. We do the research supporting them. When you hear 99.7% of all businesses small, that comes from the Office of Advocacy. But more importantly, I just wanted to drop a couple of things for you. Fintech is disrupting the financial industry, and they're doing wonderful things. You heard from Lisa, you heard from PayPal. Fintech is changing the game in the economic industry to make financial services more efficient. It's changing how we move and access money. You've heard a lot of it today, you'll hear a lot more. Fintech is one of our leading economies and our leading technologies for digital economy. 5 sectors, right? We're talking banking and insurance, InsurTech. We're talking business processes with financial and info information payments. We're talking targeted customers, whether it's retail, private, or corporate. We're talking interaction. So we heard about business to business. So we got business to business, we got business to consumer, and we got business we got business to business, business to consumer, and business to customers, and the market positions. So the peer-to-peer lending, the crowdfunding, that's all information that our office, we're highlighting the importance of all of those things. You have an advocate in the federal government, and that's what I want to leave with you. You have an advocate in the federal government working on your behalf, and so let's build wealth together. Thank you.
Thank you, Teresa. That was an important addition. The role of the Small Business Administration. And stand up once again, so if folks have questions.
Region 3.
If people have, SBA is just a critical player. Ozma, as I was saying, raised a lot of issues. There is an active discussion in Washington about the role of regulation in this sector. A lot of federal agencies are engaged in that discussion. So we'll get back to that. I think we want, particularly after we hear on deck, but I do want you to be aware that a lot of the questions you are raising are questions that are being grappled with by federal regulators, and so we want to make sure that that comes into the discussion as well. But Daniel Gorfine, VP of On Deck, a competitor of Cabbage.
Wait, is it frenemies? Is that the term? Let's see. Look at it. They're everywhere. Let's see. How do I get to the next set? Okay. Are you there? I think so. All right. Well, can everyone hear me okay? Tough act to follow, the congressman, but it really, actually, a very inspirational speech, and honestly, I think it's a reminder for all of us probably in the room of what motivates us on a day-to-day basis. I mean, certainly all the platforms here today are here to serve small business and to expand access to capital, so I think it's a very important reminder of what we're focused on here. So my name is Daniel Gorfine from On Deck. On Deck is a leading online small business lending platform that serves Main Street small businesses. We were founded nearly 10 years ago, and to date we've lent over $5 billion to small businesses across 700 different industries. That includes auto body shops, bakeries, florists, restaurants. The types of product that we're offering, very similar to what you're hearing here, are relatively short-term loans for small businesses.
Look, I honestly believe that Fintech, right, in various forms of innovation in financial services often happens outside of the banking system and ultimately gets ingested or adopted by the banking system. It's happened time and time again in other areas of lending outside of small business finance. It's happening in payments and what have you. So, I think, because non-banks are nimbler, right, and they can be a little bit more innovative and whatnot because, they don't have the same constraints. You can innovate more easily outside of the banking system. The banks watch that happen, and they either partner with us. In some cases, they may buy firms like us to be able to take that technology and offer it to their customers along with the lowest cost of capital that's out there, which is the bank's capital. Did you have another question for me? Why not Wells Fargo? Well, Joe buys better dinners. He's funnier, more handsome, and those guys weren't calling me.
For the entrepreneurs who may be considering getting into the space, what did you all spend building your platforms, if you can share that?
I don't have the firm number at my disposal. How much did we spend building them? And so I think that the platform, the investment is not, the quantity of the investment is not so much dollars as it is intellectual capital and time. These are not easy, and they're unbelievably detail-oriented, because if you think about it, if Cabbage, for example, integrates with, on Deck 100 different sources of data, what happens when one of those data sources doesn't deliver anything or deliver bad data? Right? And imagine doing that 100 times over, right? So imagine the level of sort of human capital you have to bring to bear to try and develop one of these things, given all the different what-if scenarios that have to happen. And that's sort of the way I think about it when it comes to technology. is it's easy to think about things when they work, but what happens when they don't work, right? And those are the tends to be the people, when they think that way, that build the best technology, from my point of view.
Yeah, to your question though, and I know you asked Sam, why did he partner with Regions, but I think it's really important to note that if a financial institution does partner with somebody, there has to be a real synergy there from culture, from credit, from how they deliver, from what their customers want. I mean, and that's one of the reasons we chose Foundation, is when we looked at our customers and we surveyed them, they wanted a product like this. Now, as more and more companies are coming out, they might want a product that's more like XYZ Fintech that's not even here today. So I think banks have to stay, and Regions is we are partnering with some Fintech type companies, and we have other partnerships also, because we want to stay relevant to our customers and provide a service that our customers are asking us for. So that's what's driving our decision to partner with some fintechs, is to what our customers actually want and what they're saying. But the level of scrutiny, the due diligence, the oversight, Foundation is an extension of Regions. And so we expect them to adhere to the same rules, regulations, laws, customer service standards, everything as if they were Regions. And we inspect it on a regular basis. With that.
Joe?
Yes.
So we talked about so you're a traditional bank.
Yes.
You've got bank branches. You have customers, you take deposits, and you have that relationship with the customer. I'm just curious, why wouldn't you just provide it directly to those customers? Why does the bank, the traditional bank with branches, customers, and deposits, not provide the service directly and instead partner with an online lender?
Couple of reasons. We surveyed our customers, and we found that about 20% of our customers actually were doing business with online lenders. So they're our customers today, but they wanted to have that online experience. So we went out then and looked at, okay, do we build something that's online, or do we partner with somebody that's online, or do we buy somebody that's out there? And so we made the strategic decision to partner. And why do we partner? I think Sam said it best there. It's the technology, it's the intellectual capital they put in the models, it's the way they aggregate the data. Most of the data, I think all the data that Sam uses is the same data that the bank has access to, but they're using it in a better, more efficient, automated type way that's allowing a credit decision for our customers. And so we want to leverage off of that technology.
So, but is there something about the cost of small loans or some calculation the bank is making about the types of loans that go through online lenders that the traditional bank can't provide? For example,
I would probably disagree with that a little bit. We love small dollar lending. We've just developed a new product. We've done over 3,000 units or whatever. We'll do a loan as small as $2,500 if you want it, and you come to our branches and want a loan. We'll do a credit card at $500. I'll take those all day long. But what we want is to make sure that our customers can interact with the channel that they want to interact with Regions Bank. And if they want to come into a branch, absolutely we're going to provide that service. But if they want a fully online, automated process, we now have that available for them at all. Now, not all banks can deliver at a low cost, but Regions, we love those small dollar, small business loans.
So at any point at Regions, if I walk in as a customer, or I call as a customer, I have a need, would you ever refer me to him, or would you just take me and say, hey, this is traditional? I mean, are you really looking at your client to say which modality is best for them?
Yeah, here's what we do. If you walk into a branch today or meet with a business banker today and things, we absolutely take that application. We want that application in a traditional manner, and we close 2,000 loans a month to small businesses in a traditional manner. But what we also want, again, is for that customer who does not want to come into a branch. Look, these guys exist today because not every customer wants to walk into a branch. I mean, you're using your smartphones and your cameras because you don't want film. So we have to adapt to the way our customers want to interact with us.
Yeah, and if I could, I just wanted to just go back. I mentioned before our partnership with Chase, and to reiterate how that works is that technology platforms can be very agnostic in the way they serve different segments of the small business landscape. So when it comes to Chase, they are licensing the technology platform so a small business customer at Chase who has checking deposits there can log into their account and see kind of the ready-made offer available, and really, the analogy that I think of when I look at the evolution of our space is it's similar to what happened with e-commerce in the late 90s, right? So what did Amazon do? Amazon invested heavily in the user experience, the customer experience, scale, efficiency, which is what drove many traditional brick and mortar Walmarts to start creating an online presence. And so you're seeing a very similar thing within financial services, where the technology platforms bring the scale, efficiency, user experience. That's what we invest in. And then there's things that banks do very well, having the customer networks. It might be the bank cost of capital, bank data. That stuff integrated with these platforms can really unlock very positive financial opportunities for businesses.
Yeah, I agree with Dan. I was actually just going to mention that there has been really interesting evolution. So after we had a chance to prove out our platform, we started getting a lot of calls from banks. They were really interested in licensing our technology. And that's a different relationship than the partnership that we have with Celtic banks. We got calls from at least 40 different countries. It was insane. And at this point in time, we selected global financial institutions, namely Santander, ING, Scotiabank. We're live in 5 different countries worldwide, licensing our technology. So, you heard Regions mention that they will go the traditional route. Well, in many cases, for a lot of these banks, we are their only route. They license our technology to offer their own commercial banking platform to customers online. A couple other points. Yes, we do offer referral fees. To your point about the Wells Fargo question, that was a 2-part question having to do with security as well as compliance. So we do have bank-grade security. We are a bank-sponsored program. We do regular penetration testing. We have GLBA-like standards as far as safeguarding consumer information as well as commercial information. As far as the compliance piece goes, I think one thing that we've invested a lot in is fraud and data security and really making sure we understand who our customer is. So when you're actually, if you recall, when I went through the application process, you actually have to connect to your bank. You have to know the username. You have to know the password. You have to connect to multiple data channels. It's very hard to fabricate an account. So the issue that we saw with Wells, CFPB did the $185 million penalty for. A lot of that information is readily available to your account manager, whereas here there's no individual who's going to have that information. You go in, you provide it, or you choose not to provide it. Subsequently, we have a series of nurture campaigns. You're going to get an offer. You're going to get a number of communications in your email where it's going to be very obvious to you that you applied for a loan. If you didn't apply for that loan, you're going to call us, and we have a dedicated in-house customer service team that's going to let you know, well, that's interesting. Show us some proof. Let us know if this is fraudulent. If so, we're going to take away the credit inquiry. We're going to refund you the funds, and we'll fix this issue for you.
I think we had 3 more questions.
So real quick, I'm Darren Elderby from the Urban Redevelopment Authority of Pittsburgh, Economic Development Arm for the City of Pittsburgh. And my question is, we struggle a lot with funding startup businesses, and it sounds like most of your businesses, or most of the businesses that go through you are more established. Is the process for startups different than established businesses, or can I just direct people to your websites to fill out the application? Anyone?
I think for us, it's a matter of data, right? So I think there was conversation earlier about what constitutes a small business, and likewise there's conversation around what constitutes a startup. What type of revenue are you talking about? So for a mom who's a stay-at-home mom but does and my sister does this. Yeah, something like Etsy. So my sister, for fun, does crocheting, and she makes the cutest blankets and booties, and she started this for fun on Facebook, and now I told her to get on Etsy, and she's gotten on Etsy, and she has a history. She has a history with a revenue channel. Granted, she doesn't necessarily have a dedicated office space, but she does this, and you've seen payment processing history, you've seen Etsy platform history, and so if we have access to that data, plus your bank account as a business, we can really start to figure out how to underwrite you. So I think a lot of it doesn't really have to do with whether you're a startup or a small business, because the lines are blurred, but really has to do with the fact of, do you have business history, and can you show that?
Financial tech, one of the pros of it, which is wonderful, is, like you said, the great equalizer. Almost like the show The Voice. They don't know who they're going to pick until they turn around. They just hear their voice. But the pro of walking into a bank and building a relationship is the humanistic side of it. Being able to say that I've been doing hair on my for 10 years and I'm ready to get a storefront, or those sorts of things. So I'm not sure if you're even able to answer my question, but I know it's something that we struggle with as far as trying to fund people who have great ideas and skill.
Yeah, I was just going to say, I mean, you do need to, obviously, the key with finance for small business is always about matching the right type of capital, credit, investment to the business, it's at the point in its development and the use case. If it's a true startup, and you're talking about a business that has, minimal revenues, if anything, the loans in general are going to be difficult. There are entities like Kiva that I think are doing some really great things domestically that they've shifted now to have a domestic focus as well. So there's that. There's alternative sources of finance that have been gaining popularity, whether it ranges from crowdfunding to certain CDFIs might be willing to go to very.
So if someone's able to prove that they raised 10,000.
Yeah. So. Well, all I will say is we actually, so OnDeck also partners with the AEO, the Association for Enterprise Opportunity, which is a national microfinance association, and there are member CDFIs there that through a variety of different programs, in one instance they utilize the OnDeck platform to serve their customer base, but they're also currently, AEO is building a decline matching platform. So the idea is if a business, for example, is declined because it is too young, perhaps it gets routed or matched to a community lender, a nonprofit community lender that's willing to look at a business that has 3 months of time under its belt and minimal revenues to be able to foster kind of a startup loan of some type. So I think, again, I think it's happening. I actually think that technology is going to facilitate an ecosystem where there's a healthy cascade and borrowers are kind of matched to the appropriate sources of capital. So I do think that's underway, and I think that FinTech's going to help promote that.
I think we have 2 more questions, and I think the panelists will be here for a few minutes afterwards, so feel free to come up and engage them further. But I think we have 2 more because we're a little over time.
I think to some extent you've answered my question. I was just looking at the technology and just wondering if you guys also leveraging artificial intelligence and learning trees to ensure that as new markets are coming on, because startups by nature are innovative, right? So there are markets that they're going into that you don't have all this data that is already there for you to do analytics. So how are you learning new markets so that next time you're able to go to those kind of businesses?
That's the power of big data, is the ability to start using that for its predictive power. Of course, I think what's interesting, I suspect, for most fintech platforms is, you can kind of slowly learn, and you slowly are able to kind of test innovations in a responsible way to figure out how can you serve a new industry, a new segment. And as the data becomes richer, your confidence in being able to do that will increase.
You guys started that trend, that there's some markets that were very sparse, and now you guys, because of what you're doing, you're making those markets to grow.
Right. I mean, when I said before that we serve small businesses in over 700 different industries, and that's one of the key things that comes out of the innovation. Is I think that there are many traditional banks that will look and say, "Oh, you're a restaurant? No way. We're not going to touch a restaurant." But if you're able to kind of use data to better learn restaurants and characteristics and behavior, perhaps you can figure out how to serve it. So I do think that's pretty inherent in all these models.
And
Yes, believe it or not, I have 3 businesses, and so I thought about this question with capital. So if I'm one person, but I have 3 businesses, revenue about 300,000 with all 3. So how does that work if, are you gonna look at me as one person or 3 separate businesses? And any of you can chime in too, but I'm just curious how that would work.
Yeah, I'll take that first. If you came in through traditional financing at a bank, we could look at a global cash flow and take all 3 of those businesses into consideration and look at that piece of this and stuff. So we would take a holistic approach if you were willing to, provide that information that's out there. Again, we're trying to figure out any way we can to make a loan. And so if you're one person, you have all 3 of those, and that's how you want to do it, we're more than willing to look at it that way.
I think that's true of us too. I think the part that's a little bit tricky is if you were to come in under business A and connect your business checking account for business B, that would trigger a fraud alert for us, because we would say, that's strange, her business checking account says this and she applied under this business. Right, so I think for us, we would do it holistically if that is ultimately what you decide, but you would have to let us know that information so we can aggregate your account so we don't kick you out for fraud reasons, because we want to make sure we're doing that diligence and that someone else isn't connecting to your business account to get money in their bank account, right? So short answer is yes. I think that we would just need the information from you.
So thank you. First of all, let's give a round of applause to our great presenters today. I know there was some more questions. Please come up and engage the presenters. And I also just commend to you a couple of reports. We talked about the policy discussion a little bit, but if you're interested in that policy discussion, the U.S. Department of Treasury did a white paper in May on the opportunities and challenges of online marketplace lending, and the Office of the Comptroller of Currency also did a report on supporting responsible innovation in the federal banking system. So these are two reports that are available online if you want to know some of the other greater policy issues. Thank you everyone for coming. Thank you Congressman Meeks for hosting a great session. Thank you to the SBA and all of Congressman Meeks' great staff. Thank you everyone.
The one thing I would add, I think just to add to the point you were making about the existing landscape, there are historical distinctions between consumer and commercial lending markets, but both banks and non-banks alike are subject to many of the same federal lending laws. So things like the fair lending laws within the Equal Credit Opportunity Act apply to all lenders, whether you are bank or non-bank. So having proper compliance programs in place around that is very important and obviously a core requirement of any type of a bank partnership model.
So do you have 3 minutes or you need?
I can take 3 minutes.
Okay, is there any particular questions for Daryl before he leaves? I know there was some burning, there's somebody here, right? No?
Referral fees to brokers, business clients, small business clients. So I'm a commercial lender with small business clients who already refer someone to you, can I get a referral fee?
Referral fees, he's
Referral
asking
fees,
a question
right.
about referral fees.
Not today in the current environment, but in the current environment, it's because, again, we're the program for PayPal Working Capital is lending specifically into our current client base. There's no extension beyond our current client base today.
We do have, so there's 3 different ways that we essentially acquire customers. One is direct. So if you direct and then strategic partnerships. So direct would obviously be on deck, whether it's someone coming to the platform or through a direct mailing, for example. Strategic partnerships for us include certain types of bank partnerships. So JP Morgan Chase, for example, is a strategic partnership for on deck where we're white labeling or licensing our platform for the bank. So Chase is able to serve its small business customers through its branded platform, which is powered by On Deck. We do also have a partner channel, so we do work with referral partners through a very carefully monitored program with brokers and other types of small business service providers.
All right, so
I'm a business owner from Dallas, Advantage Air Solutions. I have a question about the device you use for PayPal. You used to give them free, and then you start charging $349, I believe. Are they just more expensive to manufacture?
I think what you probably referred to, so we used to have the little triangle that would go on, work with the phone, and now the newer device, it's more for a chip card reading, and because of the new technology with the chip, it is a more expensive device. The manufacturing cost is much higher.
So very good. Thank you, Daryl.
My apologies again, Regress. Thank you so much.
We have our final speaker today from Regions Bank and Foundation Group. So, Joe, why don't you come on up? I think, are you going first?
Sure. So this is the longest I've been quiet in, I think, in my entire life. An hour and 31 minutes where I haven't said anything. I think my employees would be thrilled by that.
Can people hear?
So one request before we get started is please do stay awake, as it's been an hour and a half of listening to us at this point, but I promise we won't bore you. So you're probably first asking is, why are there 2 presenters here for this particular part of the panel as opposed to just one? And what we're going to talk about in a moment is a relationship that our company has, Foundation, with Joe's company, which is Regions Bank, which is the 13th largest bank, I believe, by balance sheet size in the country. And what you're going to hear in a moment is our company has a different take on the whole market, which is we're actually a friend of the banking system, as opposed to trying to replace them, which you might hear from a lot of others in the industry. So we have a very different way of which we go to market. So if you wouldn't mind flipping through the pages so we can talk together. Actually, I'll go over there, Joe. And I'll
You have a presentation?
Yeah, I should be there. If not, I'll make it up as we go.
Okay.
Hopefully it'll work as well as
There you
mine.
go.
There we go.
Voila.
Thanks. So, like I said a moment ago, our company is a different take in the way we go to market and the way we serve the small business community. We don't think of ourselves as an online lender. We don't think of ourselves as an alternative lender. We call ourselves a credit solutions provider. You're all probably saying, well, what the heck is that? What that means is we develop partnerships. We exclusively focus on developing partnerships where our technology and our capital can be brought to bear for the benefit of the small business customers of another firm. And we're doing that today with Regions Bank. We're doing that in a number of other situations that we'll talk about in a moment. And interestingly, as we get there in the presentation, we're doing that specifically in some areas of the minority business enterprise community as well. So our company is probably the youngest on the panel. We were founded in 2011. We have about 60 employees. We're headquartered in New York City, and we also have a location in Northern Virginia. I'm the founder and chief executive officer of the company. But we like to think about the products that we offer as being the most conventional and probably the lowest priced in the entire non-bank lending industry. If you look at the bottom of the page on the bottom left real quick, we have two basic products which you've seen if you've ever done business with a bank in your whole life. One is a term loan, and the other is a line of credit. The term loan is designed for businesses that want to expand or grow, and the line of credit is for businesses that want to manage cash flow. In all situations, the way we quote our offers to our customers is just like you would have got if you went to a bank. It's here's your rate, here's your origination fee, and let's move on. We don't sort of, try and dictate terms that sort of might sound confusing to you. We try and make it as plain vanilla as possible. And so it's interesting, earlier I heard a question about, are you a bank? And there's a lot of talk here about how some of my peers use banks to originate and whatnot. I think of our company as a bank without deposits, right? What I mean is the way we fund ourselves is not with your money that you put in your checking account, right? It's with capital we get from major institutions. And in the lower right-hand side of the page here, you see these are the two firms that support our balance sheet. We have a large private equity firm, which you've probably never heard of, called Garrison Investment Group, based out of New York. And then Goldman Sachs actually put their balance sheet to work recently by lending money to us, so we could turn around and lend it to small businesses. Interestingly, it was the first time that Goldman Sachs, which is becoming more of a retail and commercial bank, used their bank's balance sheet to lend to a small business financing company. So obviously they didn't do that lightly. They spent almost a year understanding who we are as a business, who the people are that run our business, and the quality of our products and our business practices, which we thought that was a major testament to who we are as an organization. So like I said earlier, we're not one of the companies you're going to hear radio ads from. You're probably not going to get something in the mail from us, but you'll probably hear our name if you went to work with Regions Bank and a number of other different types of partnerships that we have. So we have a few business lines. One is what we call banking solutions, which is, what that is enabling our bank partners to use the power of our platform and our capital when the bank doesn't have the ability or willingness to lend to businesses that the banks might not. So rather than having to go find somewhere else, we're right then and there alongside the bank to provide capital when that small business is looking for it. Maybe, Joe, this is a great time for you to just chime in for a second about why you're here in our relationship really quickly.
Sure, absolutely. I'm here, it's a real simple reason. I saw a lot of phones out taking pictures today, so how many of you are going to stop by and drop your film off to get developed tonight? I mean, you're not. Technology changes and things, and that's what Regions wanted to do. We wanted to partner with an online lender that provided the technology that our customers wanted in a changing marketplace to how we can meet their needs. And so we partnered with Foundation for that very simple reason. They're providing an online platform for our customers that we didn't have before we partnered with them about a year ago. And so now our customers have access not only to all the great products and services and things that Regions has to offer, we also have that digital platform, that technology, that looking at that small business differently, and things that we can offer to our customers directly online through our regions.com, and it's all powered by Foundation.
And probably important to answer your question, yes, sir, you could get a fee if you referred a customer to us. Just want to make sure we got to that before we left today. So I'm going to try and go pretty quickly. This slide is probably a little gratuitous in our favor in terms of where we fit in the market, but the point is, what we're trying to serve is customers at a price point not too much higher than a bank, but delivered through that unconventional process that you might get through a bank, right? So we believe, though, if you are in fact using technology to drive efficiency into the lending process, then why isn't your price a little bit lower, right? And so therefore, we really believe that we're operating at a level that is probably the lowest in the non-bank lending industry in terms of a price point for customers. This slide is really what we're trying to illustrate, and I think the formatting got a little messed up here. One of the challenging things about small business finance is there's a lot of different needs in the marketplace, there's a lot of different types of businesses, and therefore there's a lot of different types of products. And so if I could just sort of a word of advice for small businesses that are in the audience, just make sure you understand what you're signing. And I'm not advocating that one product is better than another, but there's the way interest may sound to you in one product versus another product, just in the way they're quoted, it actually may be a meaningful difference in terms of the effective cost to you. And again, that has nothing to do with me advocating for one product or another, but it's just of you really understanding the actually economics of the product that you're all getting, which is why when we quote our rates, it's just like you would have gotten from the bank. And so we think it's the easiest way to understand. A lot of the questions comes up about, where is your capital going? One of the things I bet is consistent with all the platforms that you're talking to today is the amount of money we're lending, right? And what defines a small business? If you talk to any bank in the country, if you talk to two of them, I bet they define a small business differently, right? And most of the time, I've heard banks that will say a small business are those with up to $25 million in revenues. That doesn't sound small to me. By and large, our industry are serving businesses that need less than $100,000 to fund day-to-day operations or to fund growth. The median transaction size that we do today is at $85,000 historically, and it's actually in recent months, it's been closer to $60,000. Right, and so some may think of that as a micro business. We just think of that as a standard small business, and they need that capital to do something, and that something might just be to manage uneven cash flow. And so we mentioned a couple times today, what we're doing as a business, and sort of why we're different, and the fact that we're actually a partner of the banking system. We have two major partnerships today in place, and we expect to have a number of more over the next couple of years where we are becoming an integrated partner of the banking system. So the question earlier about, are you regulated and whatnot? The moment I touch a customer that comes from a bank, I'm quasi-regulated as a result. That banks care deeply about where their customers go and who they're being referred to. And there's regulatory statutes and whatnot about when you're doing business with a third party as a regulated financial institution, what that means in terms of the way they have to run their business. And I'm sure my partners at On Deck, my friends at On Deck, have the same experience with what they've done at Chase. And so Joe talked a moment ago about what we're doing together. So we've enabled regions to now offer loans online. 90% of banks don't actually have an online business loan application process. I think it's more than 90% actually. They may have a click here, now come visit me at the branch, right? And some people may say, I don't have time, right? And they may want to self-serve online. And so we've given the bank that capability. So the combination of their brand, their touch with customers, their footprint, our technology, their capital, our capital, it's going to be a winning solution over time. We're also doing this with a firm called Bank Alliance. Bank Alliance is actually headquartered here in Southern Maryland. And what they do is they try and enable small banks to do what the big banks can do, right? So the big banks obviously have a lot more resources than the small banks do, both in terms of capital and people and technology resources. And so what this institution tries to do is bring some capabilities to the small banks to serve their local communities. And so what we've done is we've developed an entirely new software platform where each small bank around the country can put their name on it, can put their colors on it, can decide which customers they want to send to themselves versus send to us, but also help them drive more efficiency into their own lending process so they can deliver more capital to their local communities as well. True Fund, Joe, maybe I'll ask you to jump in here about what we're doing here.
Sure, I'll be brief with this. True Fund is an organization that's based out of New York, and they have 3 other offices across the U.S. But what they do is they provide capital to for economic development in the communities they serve. And typically, these are institutions or companies that can't qualify for traditional bank financing. So in our partnership with True Fund, one of the challenges that they have is they couldn't deliver credit to these customers under $50,000 in an economically feasible fashion. It just cost True Fund too much to underwrite and serve that need. And so we came on board and things, and we partnered up with Foundation and said, okay, let's provide credit for those companies under $50,000. Let's leverage that technology that Foundation offers with their platform. We're providing, Regions is providing the capital behind that for these loans, and True Funds now has an outlet for all those customers that they're working for that are economically distressed to help them find those small dollar loans that they need in the communities they serve. So it's really a great kind of winning partnership, really leveraging communities that are out there, the technology with Foundation, and the capital and things that Regions has to offer.
So another example of how we're intently focusing on supporting minority business enterprises is recently, a couple months ago, we announced a partnership with the Minority Business Development Agency, which is part of the Department of Commerce. So what they actually ended up doing was signing up our company as a strategic partner to work with their 38 centers around the country to support the capital needs of minority business enterprises. They selected us because they've seen what we've done with Regions Bank, they've seen what we've done elsewhere, they loved our products, they love the way we treat customers, and that partnership launched a couple of months ago. So for any of you that have relationships with any of those centers around the country, our products are now accessible through them and in partnership with them as well. And we have a number of success stories already of customers that we've done business with through that agency. And so like earlier, I'll try and make this as quick as I can, just sort of give you a feel of, if you were to go to our website, if you were to go to Regions' website and say, I'd like to go for that foundation loan, what that process feels like, and you're going to see a lot of similarities of what the other folks went through earlier. So they're designed, much like my friends here in the panel, to be very simple. Button clicks, a couple fields to fill in, drop-down boxes to get started. We've developed this really unique way of sort of getting to what industry you're in. You'd be amazed about how many customers, when they have to deal with like a drop-down system, or they have to type, like, here's the type of business I'm in, about how they can't get to the right answer. We invented this little questionnaire to ask you 3 interactive questions, and then you can find exactly what type of business you are. Why is that important to us? It helps us understand what type of business you are, what type of needs you might have, what the sort of indicative profitability of a company like yours might be, so we can right-size the amount of capital for you. We ask people to take an honor code when they apply with us. Why would we do that? We believe in reciprocity, right? So as a responsible lender, we expect to do business with responsible borrowers, and so we're going to treat our customers a certain way. We have nothing but positive things from our customers. In fact, we have 0 complaints from businesses coming through Regions Bank doing business with Foundation. So we really believe in treating our customers a certain way, so we ask them to behave in a certain way as well. One of the things that we do is that's really neat, and a lot of our partners love, is there's a lot of talk about transparency in our industry, and that's not just about the economic terms of your contract. It's how are we thinking about you as a customer. And so when customers go through our online application, we actually give them a report card, right? And so we tell them things like, your industry's borrowing history typically has been low risk, high risk, or somewhere in between. The fact that you've been in business a long time is good or bad. Your profitability of your business relative to companies in your industry looks good or bad, and so on down the line. So this way, when you get to the end of the process, it's not, well, why did I get that price, as opposed to a customer getting a different price. Now, it's not perfect, right? I mean, there's so many different variables that they have to take into account, but what we try to do is start to build a conversation with our customers and really offer them transparency even when they're doing business with us online. And so that's sort of, and so this slide is probably meaningless to you, but you heard a lot today about all the different data connections that platforms like us use, and that's really what the technology comes down to, right? And Fintech is such a broadly used term, but in the world of small business lending, Fintech in my mind means a few different things, and I call it the 3 A's. One is the word aggregation, one is the word analytics, and one is the word automation, and you're all probably saying, well, what the heck do those mean? So aggregation is all those ways we collect data on you as a customer behind the scenes, right? Where you don't have to go and supply us with documents or anything like that, and there's all kinds of neat ways of which you can do that today, which these guys illustrated earlier. Automation is just taking what normally would have been a process done by a human and doing it by a machine, right? And so if you think about delivering $60,000 transactions at a time to customers, and then if you were to have that done by people exclusively, the costs of delivering that credit go up tremendously, which means the cost that you would have to bear as a customer go up tremendously. And those are, two of the main dynamics of what a fintech platform is doing in lending that drive efficiency and a great customer experience into the process. And so these last couple screens are just sort of giving you examples again of this type of feedback that we give our customers. We try our best to give customers an instant offer. It's not always possible because it depends on the amount and quality of information that we can collect on customers behind the scenes. But again, when we can do that to customers, we will, and we can fund transactions, the same day of when customers accept and sign their offers, much like our peers can. So just quickly, I wanted to just sort of bring to life sort of some, at least one of the customers that we've done business with. So Tina Haddad came to us through a broker, actually, who did get paid for this transaction. But the interesting thing about this story, so this is a woman-owned enterprise, and she had actually stepped in to take over her business from her husband who had passed away, and she was struggling to sort of get this business back on its feet. And it was one of those deals you'd call a story deal, because on its surface, her credit score didn't look so good, and on its surface, her cash flow looked to be struggling a little bit. But it was one of those businesses where the intent was there without a question in terms of her willingness to repay, and we decided to go forward with the transaction. In fact, my team told me yesterday that this customer actually calls us every 2 months just to find out how we're doing. And I guarantee that Cabbage and On Deck and PayPal have stories just like that as well, which is giving these customers a chance, right? And I think that really what it comes down to, and doing it in a process that is not very difficult. Just go ahead.
Even though it says customer name is Tina Haddad, there's no recourse to her personal assets, right? The LLC still stands.
So I think. So PayPal, I think, was the only firm up here that would, they were saying they only require recourse to the business. And I think one of the reasons they can do that is they have first right to the cash coming into the business, right? So they're in a highly advantageous situation. The other firms on the panel here today, we draw out of the account expecting money to be there, right? For one thing. And the other is, none of us are taking collateral, right? And so when most of the time when banks are lending to commercial enterprises, they're looking not only for an ability to repay, but they're also looking for a secondary source of repayment, namely some type of specific collateral, whether that be real estate or receivables or equipment. And so we're relying on the personal guarantee of the individual.
So the LLC really doesn't, the secondary. I mean, you're going to be able to go.
Well, look, I would say the first thing we always do if a business has trouble with repayment is we call it assuming positive intent, which means get in touch with them, find out the issue. Can we solve the issue together by giving you a different payment schedule or relaxing our payments for a period of time to give you the chance to get back on track? I mean, what I always say is small issues cause big problems in small businesses, right? Because small businesses, just by their nature, don't have the same type of resources that big businesses have. So we always assume that our customers want to repay, and so if they're willing to work with us, we're willing to work with them. But for customers that just want to play hardball and don't want to pay back and just assume that it's not their obligation, then we would look to the individual at that point.
Just the last question.
Sure.
Why isn't this more than like a consumer financial loan rather than a business?
Because the predominant thing that we're evaluating is the business's credit profile, right? And the stated intent of the capital is to use it for business purposes. We specifically make customers acknowledge that they're not using capital for any household reason whatsoever. So I'll just finish there. Go ahead.
I got a few questions.
Sure.
Let's see here. For you, what metric did you use to partner with Joe? Why Joe instead of Wells Fargo or Bank of America? And then for you two, how secure is your platform? Wells Fargo has about 6,000 branches. It had 5,000 employees do something wrong. How do you know that you're not going to have 5,000 new Cabbage and On Deck customers? Like, how do you really verify that? And then, what stops you from buying him and taking him out?
Would that be a bad thing?
It wouldn't be a bad thing.
He's like, I've had my eye on a boat for a long time. Might be the end game.
So businesses used for things like inventory purchase, working capital needs, hiring, purchase of light equipment. We offer loans that go out to about 36 months and up to $500,000, though the average loan is typically around 12 to 14 months and about $50,000. According to a study that we actually updated last year, the first $3 billion that OnDeck has lent has generated $11 billion in economic output and helped to create 74,000 jobs. So in terms of the reason OnDeck was founded, it was largely to solve a key public policy challenge, and that is efficient access to capital for small businesses. As this chart demonstrates, and you heard earlier from Daryl as well, we've been seeing, the truth is it's been a multi-decade decline in traditional lending to small businesses, though it was absolutely exacerbated post-financial crisis. So why has this credit gap emerged, and why is there this challenge for efficient access to capital? I would argue that there's three primary reasons, and you've heard some of them mentioned today. First is that traditional lending typically looked at a small business, and instead of assessing the small business, they assessed the personal FICO or credit score of the small business owner. So post-financial crisis, you saw overall small business owners were going to have their credit scores impacted potentially by the crisis. And reality is that historically disadvantaged groups on average have lower FICO or credit scores, which is going to create an additional barrier to accessing capital through the traditional approach. Second, the traditional loan application and approval process is very time-consuming and manual. And what that does is it increases the costs and it undermines the economic viability both for the lender and for the small business that's applying. Third, this whole process generates a lot of friction for the small business owner, and high decline rates tend to be a deterrent. So you heard that many small businesses don't even apply for credit, assuming they will be declined. So given these three problems, we at OnDeck are trying to solve them in the following three ways. First, in terms of access, we're using data to assess the creditworthiness of the small business. While we do look at the personal credit history of the small business owner, it is but a small part of the overall evaluation we're making about the actual performance of the small business itself, which certainly helps to expand and unlock access to capital. Second, our online application and underwriting process is accessible and very efficient, as opposed to the reams of paperwork that you might be used to over a multi-week period through a traditional lending process. And then finally, borrowers through OnDeck are typically given same-day credit determinations and can be funded within 24 to 48 hours, which again is what drives why you hear the customer satisfaction and feedback scores from OnDeck and others in our space. Now, in terms of, as noted earlier, the efficiency of the platform and the expansion of access to capital is largely driven by our fifth generation scoring model, which we refer to as the OnDeck score. The OnDeck score is what analyzes a variety of data points in order to form essentially what is a FICO, but for the small business. So essentially the credit score of the small business entity itself. That's what we're using to help drive our decisioning and expand access. This next slide here helps to unpack that a bit further. It gives a breakdown of what a traditional personal credit score is made up of as compared to the OnDeck score, which is capturing a far more robust set of information about the actual business and its specific performance. So here, this next chart shows the performance of the OnDeck model, namely the power of our score and its ability to drive accuracy, predictability, and access. We can essentially loan twice as much given the same level of risk as if you just relied on a FICO score or a personal credit score in order to make a loan determination. And every version of the OnDeck score, as I mentioned, we're now in our fifth generation, is moving the curve you see on the left side up and to the left as our models continue to improve. So now you've heard a bit about the OnDeck mission and our model, so let's shift over to the general customer experience. And before I jump into this though, it is important to note that at least from the OnDeck customer experience, it is very typical and common for a small business owner to actually speak to a customer service representative at some point along the process. These are fairly large loans, it's a serious decision. So in speaking to somebody about what the actual business need is in the use case, you can determine the appropriate product fit. Nevertheless, our online application begins by asking for basic information, including the loan amount that's needed, the use case, and then the name and email of the business owner. You then have the information about the business entity. We ask for basic information, including the business name and address, the tax ID, and self-reported revenue information. Then there will be additional information provided about the small business owner and ownership structure of the business entity. Finally, we will pull either through upload of a PDF of prior month's bank statements, or similarly, the link that you see circled there allows you to kind of connect directly with the bank account information. So at that point is where the system then runs the information through our model in order to reach an ultimate decision. So at that point, an offer is provided to the small business customer, subject to the customer going through additional steps of identity verification. So as the next slide shows, these are additional bits of information that we'll ask about the business owner in order to further ensure that we know our customer and are able to verify that identity. So ultimately, the small business owner is presented with a loan summary and a loan agreement, which they must review prior to signing a loan and then being funded. They'll ultimately be funded within 24 to 48 hours in the typical experience. Okay, so here, of course, I'm giving a technology presentation, so the technology is not going to work. This is supposed to be a lovely demo of what's going on behind the scenes in terms of the information that's being utilized by the platform. Unfortunately, the video is not working, so I'm going to ask you to envision the most futuristic model you can possibly imagine. And now, as you're watching that video, I'm going to walk you through it. So we have something called, the behind the scenes is a system that we call Grover, which stands for the Giant Repository of Value Estimation Records. This is OnDeck's proprietary database of business information that, in conjunction with our OnDeck score, drives our business and credit decisioning. So Grover contains a trove of national business records as well as aggregate historical OnDeck customer data that gives us insights into business performance trends by industry. So if you think about the fact that we have 10 years of experience and have captured across 700 different industries, we have a good sense of a snapshot of what a landscaper in Minnesota might look like in terms of how a business like that would operate. So we're able to model that against other landscape businesses that may be applying. What we built with Grover was essentially a data and a learning platform that can ingest, transform, aggregate, and learn from hundreds of data sources at scale. And then we build kind of internally analytic services on top of that database. I'll skip because I'm sure your imaginations are running out in terms of what else is happening on this screen. All right, let me turn up the volume here. Can I pause this? Let's see if we can pause. Okay. All right. Do we know how to get the volume turned up on this? On the computer? On the computer also. I want you to hear the... Let's see.
Well, I don't like to say anything really nice about competitors. I will say, in spite of your PowerPoint, you do have a pretty good platform. No, the volume works great. I might have to just unplug this. That's our new testimonial.
I am Dr. C.T. Lowry. I am a family and cosmetic general dentist here in Cary, North Carolina. Having my OnDeck.
Stop that. Let's stop that for a second. Hold on. We're going to go back and try again. Well, the point I was going to make here is leading into this, since it decides to start on its own. At the end of the day, the platform is focused on the small business customer. And so this is the voice here of one of our customers, Dr. Lowry from Lowry Smiles. And I'm going to try to kick this, turn it down, it was too loud.
It's hilarious.
All right, let's go one more.
I am Dr. C.T. Lowry. I am a family and cosmetic general dentist here in Cary, North Carolina. Having my OnDeck finance team presented an awesome opportunity for me and my practice to incorporate technology, helping me to stay on the cutting edge means of marketing, means of growth, and I'm very appreciative as a small business owner. I've used my OnDeck funding to help incorporate modern technology here in the office. I'm now an owner of a CERAC machine, which allows me to make crowns here in the office. So I am a single-day crown dentist, modern dentist. This is helping me to be competitive as a small business with some of the larger corporations out there, but to meet the needs of my patients. Why would I recommend On Deck to small business owners? They help to make a dream come true. I would encourage small business owners to never take no, or never take the first no that you get. Do your research, and you can find an opportunity like On Deck that helped to make my dream a reality, and they can do the same for you.
All right, well, you got to hear most of it, but at the end of the day, this is what it's all about, is to serve the small business, expand access to capital, and make sure that a small business owner can pursue his or her dreams. So, thank you.
I know we're going to have to excuse one of our panelists, Daryl, shortly from PayPal, but I did want to take the opportunity to just, since we've heard from three of the platforms, we still have one to go, to introduce this role of regulation with regard to platforms. Over the last year, the federal banking regulators, the Office of the Comptroller of Currency, the Federal Depository Insurance Corporation, and the U.S. Treasury, the Federal Trade Commission, and other regulators have solicited, as well as the U.S. Congress, the U.S. Congress has had hearings, have solicited feedback from the public about whether online platforms should be better regulated. Questions have been raised about consumer protections, transparency in pricing. Some of you all touched on some of those issues. Big data and how you determine credit worthiness with some of your proprietary underwriting algorithms. So I just want to hear, I know PayPal's leaving soon, from you about the role should there be a designated federal agency to provide oversight for online lenders? Some think you're more lightly regulated than, say, consumer loans. So just if I could hear from you about what you think the role of regulation is, and whether you believe there ought to be an agency that has oversight over your platform.
Sure. So two things to start with. One is that maybe not all of the programs here, but I think generally on the panel at least, you have entities that are issuing, as we are, through an FDIC regulated bank. So we issue a bank loan. We made a deliberate choice to not issue an advance product. It is a loan issued by a bank that is subject to FDIC review. We're subject to audits, and we go through the audits as well. So the product is regulated as a business loan. In addition to that, PayPal as an entity is regulated by CFPB, so as oversight for the entirety of the company. So we are
That's
in
the
a
Consumer Financial Protection Bureau.
So we are in a regulated environment already to that effect. So beyond that, I know obviously other interests in regulation. It's not my job, obviously, to figure out who's going to regulate, but I would just say the word of advice would just be, I hope we listen to constituents, because it's the business owners like Lisa and tens and tens of thousands of others out there that my fear would be that we get too much into the camp of thinking that acting like this is consumer versus business, and effectively boxing people out of the opportunity. So that'd be my only, again, not probably my job to figure out who's going to regulate or what level of regulation will come in. I think any time you have supply and demand that's distorted, you can find plenty of bad actors out there with egregious prices. That's why I'm comfortable talking about ours. They generally are competitive with traditional kind of rates. We're in it for a bigger ecosystem play for PayPal, not just to make money in a lending business. So, and when Lisa said the words investing in her business, the reality is we are, because it's the network effect. It's the PayPal core relationship that we're really interested in, why we entered this business in the first place. So that's my only word of caution, and is that when you start talking about that line of $100,000, there are a lot of businesses that need far less than $100,000 for very, very legitimate business purposes.
All right, I know we have, but I know we have one burner. Can you take one question?
I can, and if I could just first offer my apologies. I have a family function back in North Carolina tonight, and as much as I hate the idea of offending anyone here by leaving early, I'm waking up with my wife tomorrow. So yes. Yeah, so on the former, the first thing the video tried to show was around our vision, and I'll just read part of it. So we believe now is the time to reimagine money to democratize financial services so that managing and moving money is a right for all citizens, not just the affluent. I'll probably stop at that. So that portion of it. So we do absolutely see our role and our place in the world that we serve as that democratization of financial services, more